Gold Price Expectations. A Gold Price Forecast, Part 2. In Part 1 of this video series, we discuss the current state of gold prices, factors affecting the gold price predictions, and more. In Part 2, we will discuss further price predictions as well as the various gold investing options. To read the full article right now, see the link in the video description. Also, if you think that your retirement savings are not keeping up with the cost of living, see the link in the video description to access the free inflation retirement calculator to make sure you are on track. Gold price predictions and causes. As mentioned in the previous video, long-term forecasts suggest that by 2030, gold could surpass $5,000 to $6,000 per ounce, especially if central banks continue to accumulate reserves and economic uncertainty persists. Also, the Eastern BRIC central banks alone have been setting historic records of mass gold purchases for the past 5 to 10 years, with 2023 and 2024 both being banner years. This mass stockpile of gold bullion by sovereign and institutional investors is not expected to slow down, thereby driving up the price. This constant demand from just this one investment source has been and will likely continue to create a stable price floor under the gold price. Also, with gold mining projects under tighter regulations and time constraints, this affects the dwindling supply, further pushing the price of gold upward. Some once optimistic 5-year projections predicted a $7,000 price target, but many analysts are now stating that even this range is too conservative. Analysts and financial institutions have provided various forecasts for gold prices by 2030. Investing Haven projects that gold prices could reach between $4,500 and $5,000 by 2030, citing long-term bullish trends. CoinCodex estimates that gold could gain approximately 91.7% from 2024 prices, reaching between $4,591.62 and $5,612.13 by 2030. Coin Price Forecast anticipates that gold will rise to $4,000 within 2028 and reach $5,000 by 2031. IBIS Ingold economist Charlie Morris predicts that a troy ounce of gold could surpass $7,000 by 2030, influenced by factors such as inflation and real interest rates. Should you invest in gold? Investing in gold can be a smart move for portfolio diversification and risk management. However, it's crucial to consider market timing. Buying during dips and holding during market instability can maximize returns. Working with a reputable gold investment company can assist in finding logical entry points. Storage and security. Physical gold requires safe storage, while ETFs and mining stocks offer alternatives. However, paper gold assets introduce greater counterparty risk and do not provide tangible physical ownership of the metal itself. Diversification. Relying solely on gold isn't advisable. Balance your investments with stocks, real estate, and other assets. Understanding market trends. Keeping an eye on macroeconomic indicators and central bank policies can help in making informed investment decisions. For those considering an investment, there are multiple ways to get exposure to gold. Physical gold, coins, bars, and bullion. Make sure to purchase from reputable dealers and ensure secure storage options. Gold IRAs are a great way of owning physical gold while enjoying added tax benefits as well as ensuring safe storage of your precious metals. We will discuss this investment strategy further. Gold ETFs, exchange-traded funds. Easier and more liquid than physical gold, ideal for those looking for convenience. Again, these investments involve higher risk. Gold mining stocks. Investing in companies that produce gold offers indirect exposure to gold price movements. However, gold mining stocks are known for higher volatility and greater risk. Futures and options. For experienced investors comfortable with higher risks. Suitable for those familiar with derivatives trading. Gold leases. Fixed income products such as gold leases provide the investor the opportunity to earn interest on gold as well as physical ownership. See the link in the video description to take advantage of monetary metals gold and silver lease options. Earn interest in gold paid in gold. Looking for a place to start? Working with a trusted gold investment company that understands the various market forces, inflation, and global economic dynamics can make the gold investing landscape smoother and less stressful. Gold IRA companies, more specifically, provide a tax-advantaged way of buying and owning gold without the stress of dealing with local or online vendors or the need for security and storage in your own home. These companies can provide access to competitive prices, price transparency, a reasonable buyback policy, reliable customer service, and security of your precious metals. Finding the right gold IRA company for your individual needs is critical. For example, if you require a low investment minimum to start a gold IRA, Birch Gold Group or American Hartford Gold would be two choices to consider. However, if you are a serious high-net-worth investor who can afford a higher minimum to take advantage of the most competitive gold prices and lifetime customer support, then Augusta Precious Metals would be a good fit. For a highly personalized experience, National Gold Group is a family-owned gold IRA company that offers a low minimum investment, a no-fee buyback policy, and great educational resources for its clients. Furthermore, Noble Gold Investments provides gold and silver IRAs as well as private investment options for home storage. See the links in the video description to choose the right gold IRA company for your individual needs. Gold's future looks promising with economic and geopolitical factors likely to support its value. While no investment is without risk, gold remains a valuable asset for those seeking long-term stability. If you're considering investing in gold, staying informed about market trends and consulting financial advisors can help you make sound decisions. With persistent inflation, geopolitical uncertainty, and fluctuating central bank policies, gold remains a reliable store of value in an unpredictable economic environment. Investors who carefully strategize their entry points and portfolio allocation can benefit from gold's long-term potential. If you have a minimum of $100K in savings to protect and want to take advantage of the most competitive gold prices, see the link in the video description to attend a free gold investment webinar hosted by Augusta Precious Metals. Secure your place today. Thank you for watching.